Malaysian Government Securities, or MGS, are financial instruments issued by the Malaysian government through Bank Negara Malaysia. Basically, MGS are interest-bearing securities, so investors will receive interest payment regularly. The main purpose of MGS is to help the government raise funds for national development, like building schools, hospitals, roads, and other public facilities. At the same time, MGS also provide a safe and reliable investment option to the public. MGS plays an important role in Malaysia's financial system. They help the government manage liquidity and also provide funding for development projects. Besides that, MGS influence benchmark yields, which are used as a reference for other debt instruments in the market. MGS are actively traded in the secondary market. This means investors can buy or sell them easily before maturity, which improves market stability and gives investors more flexibility in managing their investment portfolios. This active trading also supports Malaysia's domestic capital market by attracting both local and foreign investors who are looking for stable and security.
This slide explains the market participants and their roles in the Malaysian government securities market. First is Central Bank, which is Bank Negara Malaysia. Its role is to ensure transparency and compliance with monetary policy. Bank Negara Malaysia manages the issuance of government securities with the Ministry of Finance and appoints principal dealers to maintain market liquidity. This action helps ensure market stability and build investor confidence. Next are money brokers. Money brokers act as intermediaries by connecting buyers and sellers in the market. They help provide liquidity, ensure efficient trade execution, and operate under the supervision of Bank Negara Malaysia. Their roles support fair pricing and smooth market operation. Principal dealer. Principal dealer are financial institutions appointed by Bank Negara Malaysia, comprising commercial banks that act as official market maker in the Malaysian government securities market. Their role including ensuring continuous liquidity in the secondary market, acting as a liaison between the government and institutional investors, managing transparent bidding during the primary auction, and providing bid and offer price to avoid market disruption. They also earn profit through change in interest rate and bid-ask spread. Lastly, institutional investors. Institutional investors such as ETF, KWAP, as well as insurance and taxi companies are the main holder of MGS. They adopt a buy and hold strategy because MGS provide long-term stability and guarantee capital value. ETF and KWAP using MGS to ensuring they contribute to fund are invested in such assets, while insurance company invest to meet long-term liability demand while complying with solvency regulations. MGS is considered a safe haven asset because it is guaranteed by the government and functions as a risk management instrument and help balance portfolio that also contain high risk assets such as stocks. I will explain about characteristics of MGS. Malaysian government securities are issued through an auction method by Bank Negara Malaysia. Official notices are issued through the fast electronic system to give large investors time to pay cash. Only principal dealers such as Maybank and RHB can bid directly, while other participants must go through them. Bids are arranged from lower to high yield, and the coupon rate is set based on the average successful bid. Payments are proceeded automatically through the rental system.
After Malaysia government securities are issued in the primary market, they can be traded in the secondary market before maturity. Retail MGS can be bought and sold on Bursa Malaysia or over the counter through appointed banks. In OTC trading, transactions are negotiated via phone or electronic platforms like Reuters. Principal dealers provide two-way quotes to ensure liquidity. Once a price is agreed, the trade is settled through the rental system managed by Bank Negara Malaysia. In this market, sales proceed to go to investors or dealers, not the government. Once an MGS transaction is agreed by both parties, the settlement process is carried out automatically to reduce the risk and to reduce the risk of payment failure. Transactions are settled through the real-time electronic transfers of funds and securities rentals, which is Malaysia High Value Fund Transfer System connecting all banks. MGS transaction also use the delivery versus payment (DVP) system, where securities are transferred only when payment is made simultaneously. If funds are insufficient, the system stops the transaction. ensuring trust and financial integrity. After the settlement process, the scriptless securities trading system or SSTS take over. All Malaysian government securities are held in digital form with no physical certificate issue. Ownership is recorded electronically in securities account at Bank Negara Malaysia. Whenever buying or selling occurs, the system automatically updates the ownership records, allowing transaction to be completed quickly and efficiently. This reduces risks such as loss or forgery of certificates, lower operational costs, and improve transparency. Most importantly, SSTS enable Bank Negara Malaysia to monitor the national debt position in real time, making Malaysian government securities highly liquid and reliable in today's financial market.
Now I will explain the benefit of MTS to the both investor and the issuer. First, the benefit of MTS to the investor. One of major benefits is low risk. MTS are issued and guaranteed by the Malaysian government, making them one of the safer investment in the market. Investors have a high level of confidence because the risk of default is very low. Next is liquidity. MTS are actively traded in the secondary market, which allow the investor to easily buy or sell them before the maturity. This gives investors quick access to cash when needed. Another benefit is regular income. MTS offer fixed rate coupon payment that are paid twice a year. This provides investors with stable and predictable income throughout the bond period. Lastly, MTS provide potential tax benefit. Interest income for MTS is a center for withholding tax and capital gain tax, which help increase investors' net return, including for non-resident investors. Now, the benefit of MTS to the issuer, which is the government. Firstly, MTS help fund public projects such as roads, schools, and also hospitals. Secondly, MTS assists Bank Negara Malaysia in managing liquidity and stabilizing in the economy. Thirdly, MTS support debt management by refinancing existing government debt. And finally, MTS acts as a benchmark yield curve, helping to price other financial instruments in the market.
To conclude, the Malaysia Government Securities or MGS market plays a very important role in Malaysia's financial system. It provides a safe and credible platform for the government to raise funds while supporting overall economic stability. Through the combined efforts of Bank Negara Malaysia, the Ministry of Finance, money brokers, and other market participants, the MGS market has become transparent, liquid, and well-regulated. This helps strengthen investor confidence and ensure effective price discovery. In addition, MGS helps establish a benchmark yield curve and improve financial resilience. Overall, a well-managed MGS market enables Malaysia to better face both domestic and global challenges and global economic challenges.
That's all from us. Thank you.